Hi everyone and welcome to today's video. Today we are going to discuss about a concept called buyback. What is buyback? What can be the different types of buyback and what can be the different benefits of the buyback to the investors. Buyback is a process when company buys its own outstanding shares to reduce the number of shares available in the market. Company buys the shares via different methods. There are two methods of which company can do their buyback. One is the open market and the second one is a tender route. We will discuss this process and what can be the benefits to the investors in the long term as well as in the short term. Open market buyback, as the name describes, company buys the shares through open market via exchanges. Company fixes a price and till that price company keeps on buying the shares till their decided budget. And the second method is a tender route buyback. In tender route buyback, company gives opportunity to the shareholders to tender their shares in the buyback at a fixed price. We will discuss two different case studies of open market as well as of tender route. First, we will discuss what can be the benefits of the buyback. Company does buyback to reduce the number of shares available in the open market. So, to increase the value of remaining shares by reducing the supply available in the market. By reducing the supply in the market, company can inflate the EPS and that can help company to increase the return on equity. By doing the buyback, company's share capital gets reduced and that helps to increase the return on equity. For example, a company's share capital is rupees 100 and company is earning profit of 110 rupees. So 10% is the return on equity. But company does a buyback and reduces the share capital to 90 rupees and company still makes a profit of 110. So the return on equity can be increased till 22%. So that can help to increasing the EPS as well as the return on equity. Buyback also demonstrates investor that company has good amount of cash on their balance sheet and there are very low chances of economic crisis in the company in coming times. Let's discuss the Infosys open market buyback which they did recently. Company announced a buyback of 9,300 crore rupees via open market. They fixed a price of 1850 rupees per share. At that time, Infosys was trading around 1500 to 1550 rupees per share. 1850 rupees is not the fixed price. This is the higher price. Company can buy shares at a price below than that as well. This is the higher limit of the price band. If price exceeds 1850 rupees per share, company will stop buyback for some time. Once price comes below 1850, company will start buying shares again. This is an example of open market buyback. Let's discuss about a tender buyback. Wipro, a IT company, did a buyback of 12,000 crore rupees via tender route. They fixed a price of 445 rupees per share. At that time, Wipro was trading around 360 to 370 rupees per share in the open market. But Wipro has fixed a price of 445 rupees. So this can be a benefit for the shareholders to tender the share at the higher price by buying shares at a lower price through open market. In tender route buyback, the acceptance of the shares depends on the proportionate basis. For example, a person owns 100 shares of Wipro. It is not compulsory that all the 100 shares will be accepted in the buyback. The buyback acceptance ratio can be 10%, 20% depending on how many shares are tendered in the buyback. And there can be other benefit of the buyback as well. For example, if a person wants to exit the investment but there are short-term capital gains as well as the long-term capital gains on their investments. But in the buyback, investor has an opportunity to tender their share at a higher price than the market and also earn a tax-free income. For example, if a person sells shares in open market at 360 or 370 rupees per share, that can come under short-term capital gain or long-term capital gain, depends on his holding period. But if a person tenders his share in a buyback, that profit earned through buyback is completely tax-free. So that can be a benefit to the investor as well. So this was our video on the buyback. I hope you find this information useful. If you find this information useful, please like, share and subscribe to the channel. चैनल को सब्सक्राइब करके रहिए अपडेटेड मार्केट रिलेटेड. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.